We get a few queries a week relating to cases where the amount of tax due on the IT34 does not match the amount of tax due shown by WinTax where lump sum payments are received. 9 times out of 10, these cases concern situations where lump sums were received in previous tax years and the tax practitioner was simply not aware of these amounts. Consequently, the practitioner never entered these amounts into WinTax's lump sum extra detail screen in the years that these previous resignation, withdrawal benefit or retirement benefit lump sums were received. You see, if a taxpayer receives a lump sum, then that lump sum affects the tax that will be due on any other lump sums the taxpayer may receive in future tax years. Take a case, for example, where a taxpayer retired and received a retirement lump sum of 400,000 Rand from a retirement fund in this tax year. The tax certificate shows the code 3915 retirement lump sum of 400,000 and it shows tax of 18,000 Rand deducted as code 4115. If we open the lump sum extra detail screen and enter the 400,000 in the retirement or death column, then in the auto summary screen, WinTax shows 0 tax should be deducted. Obviously, WinTax uses the retirement set of tables which show that the first 500,000 of a retirement lump sum is tax-free. Why then did SARS's directive tell the retirement fund to withhold 18,000 Rand tax on this retirement lump sum of 400,000 Rand? If we investigate further, we will see that other lump sums were taken in the past. Maybe when the taxpayer switched jobs and cashed in his pension of 50,000 Rand at the time, or maybe the taxpayer simply made a pre-retirement withdrawal from a provident fund. The taxpayer could have also matured an RA in the past and received a lump sum of, let's say, 150,000 from the RA fund as well. Although SARS will have all these lump sum payouts on record, experience has shown that taxpayers seldom remember these amounts. If you investigate further and enter these lump sums taken previously onto the screen in WinTax, then the tax on the 400,000 Rand lump sum taken this year will be correctly calculated. If this taxpayer is a long-standing client and you have imported records every year, then these prior lump sums will automatically be shown here for you. SARS uses a special accumulative method of taxing multiple lump sums. In the case of multiple lump sums received, then all the lump sums are added together and the total is taxed using a set of tables applicable to the lump sum taken last. The lump sum taken last was this 400,000 retirement lump sum, so the retirement set of tax tables is used. The total of all lump sums is 600,000, and the total of 600,000 is taxed as per the retirement tables, where the first 500,000 Rand is tax-free and the balance of 100,000 Rand is taxed at 18%. The tax is thus 18,000 Rand, and from this 18,000 Rand we can deduct any tax due on the prior lump sums of 200,000 taxed using the same retirement set of tables that we used to tax the total of 600,000 Rand. Using the retirement tables, the first 500,000 of the 200,000 Rand lump sums taken previously is tax-free, so the tax on the 200,000 is 0. This means the tax due on the 400,000 Rand retirement lump sum taken this year is 18,000 Rand less 0, which equals 18,000 Rand. Note that no credit is given for any tax that may have been paid on any lump sums taken prior to the 400,000 Rand lump sum received in this current tax year. Only tax deducted on this specific lump sum taken last in this current tax year will be allowed as a credit. Note also that if the 400,000 Rand retirement lump sum received last in this current tax year had been a pre-retirement withdrawal, then the withdrawal set of tables, where the first 25,000 Rand is tax-free, would have been used in these calculations.